those of you not familiar with ETFs, I'm going to walk you through from scratch what they are and how to access them. And so there's just a wealth of information out here that's free to use. I'm going to go to Yahoo Finance, okay? It's the easiest one to understand. And you can type up ETFs for anything. And I'm going to show you several different ways. But I don't recommend buying mutual funds because what happens is there are ridiculous fees, 3, 4, and 5% at times. And then what happens is you end up paying a bigger tax bill as well because portfolio managers at mutual funds will trade a lot. And if you hold something for more than a year, you pay less taxes. They don't care about your tax mandate. They'll buy and sell a lot. Okay, and they'll chase performance. Like what happened yesterday in the markets when it was up 1,000 points, biggest one-day increase in history. There's many reasons why it went up. One of them was because, and I've been there before, portfolio managers chasing their bonus before year end. So anyway, but I'll show you ETFs here, and ETFs don't have 3 or 4 or 5% fees per year. It's usually 0.5% or less, and ETFs, 90% of them. 90% of mutual funds underperform ETFs. Okay, it's a big scam. Mutual funds are a scam, and you can go in my vlog and watch a vlog I wrote about. It was called "Mutual Funds Are a Scam," because I really believe they are. Okay, all right. So there's certain ETFs, like there's the Qs, and so this here is the ETF for all the exchange traded funds, for all the tech stocks that are on the NASDAQ. Okay. And what you can do is you can actually go and look at the holdings as well to find out what's in there. Okay, and you'll see it's mainly tech stocks here. Okay, and so Apple, Microsoft, Amazon, Google, Facebook, that sort of thing. Okay, and let's see the fee here. The fee on this ETF is pretty low. Let me see here. Profile. Here it is here. It's called the annual expense ratio, and it's only 0.2% per year, which is amazingly cheap. Okay, it's very, very cheap, and Invesco is a company that provides that ETF. There's ETFs for basically everything. So if I want to invest only in Brazil, I would type up EWZ. That's how we say Z in Canada. Hit enter, and this is an ETF for Brazil, which means I can buy this stock. It looks like a stock. Although it's not, but it trades like a stock. EWZ is the ticker. And what I can do is I can get exposure to Brazil. And let's see what's in there. Okay, let's go to holdings. And here's the sector holdings. Okay, so financial services, basic materials. This makes sense, basic materials, because Brazil is a very natural resource-based economy with companies like Petrobras, which is petroleum Brazil. And then they have a lot of other commodity companies too. All right, so let's go down here and see what is in them. Okay, so the first one is a bank. You got CVRD, that's a copper company. And then you've got Petrobras, okay? So 2 different types of shares. We won't go into what these mean. So you can find them all out here. Okay, so that's Brazil. And let's see what the fee is there. Okay, so the expense ratio is 0.59. It's a little bit above 0.5, but still not too bad. It's a great way to get access to Brazil. And this is great because that way you don't have to go and buy every single stock in Brazil to create this index. Or you don't have to buy a Brazil mutual fund, which will probably underperform this anyway because there's high fees. And this is made by iShares. And iShares is another great company when it comes to ETFs. All right, and we can do the same thing for any country, like EWC is Canada, that sort of thing. Or just type in ETF, and sometimes you can see a drop down. Oops. Of a lot of different types of ETF. The first ones that come up. Here's a biotech ETF. Careful with biotechs. Here's a gold ETF. And if we just want to buy pure gold, instead of going and buying gold, it's the same thing. Just buy it here. GLD. EA Sports in the game. GLD. Sorry. All right. And this is gold shares. And when I buy gold or bet against it, I don't buy physical gold. I buy this. Okay? It's great. And it's got an expense ratio of 0.4%. I don't mind that. I mean, if I wanted to, I can go buy physical gold, but it's too much of a hassle. And then how do I know if it's real? And you get the idea. All right. So anyway, and if you want, you can actually go to, I recommend this website called Vanguard. Okay. So Vanguard is a great ETF company, probably the best. And there are other companies that make ETFs, like there's Schwab, there's Charles Schwab. There's the iShares brand as well. But if you go here to Vanguard, and I actually, I have a course called the Complete Personal Finance course where I teach you everything about investing. Okay, and it can be, I talk about bonds, commodities, stocks, and all this stuff too. And I help you create a diversified portfolio from scratch. I'll never tell you what to buy, but I'll always help you decide how to analyze something. Again, my goal as a teacher is to help you learn how to fish and not just give you a fish. Okay. All right, so if you go here, you can do a search on different retirement plans or ETFs as well. Let's see, investing, Vanguard ETFs. Here it is here, okay? And all this stuff you can get from Yahoo Finance as well to find out what the holdings are. Okay, and this is really, it'll explain what all these things are, and you know, it's why you should invest in them. It's less risk, it's diversified, less work obviously, and lower cost. Okay, the fee structure is a lot lower, as we know, than mutual funds, which are an absolute ripoff. It's a ripoff. It's just, you know, mutual funds spend a fortune every year on advertising, and they have a very strong union as well with politicians. Okay, they pad the wallets of some people. I'm not going to say who or why or when. Okay, and so here there are so many different types. This is a great website to start actually, as you look in ETFs. And there's bond ETFs as well. Okay, it's not just about stocks, right? There's bonds as well. And so this one here, the ticker is Bond, James Bond, BND. And so we can click here if you want and learn more about it. You can get what's called a prospectus, which is a PDF which will explain what you're getting yourself into. And you got to read all those things first. Look at the expense ratio on this. It's low, eh? And look at this. It's amazing. That expense ratio is 93% lower than the competition. It's incredible. And that's just a unique identifier for tech stuff. Anyway, you can go through that, and this is a great website. But BND is the ticker. So let's go to Yahoo Finance and learn more about BND. Okay. When is the next bond movie coming out? Anybody know? Okay, here we go. So if I type here BND, okay, go, and it will pull up the Vanguard Total Bond Market ETF, Exchange Traded Fund. And what we can do is we can learn more about it here, what the yield is, which means the coupon, the dividend, so to speak. Yeah, so anyway, it's all here. You can go to profile. It should say, it said 0.04, I think, on the other website. That's close enough, 5%. It'll tell you what's in it as well. Okay, so holdings. And the way it works with bonds is, so AAA rated bonds are the most secure ones, the ones where you probably, most likely will never lose money, most likely. And then it goes AA, A, and then below A is stuff I don't want you to buy. It goes triple B, double BB, etc. And below A is called high yield, which means higher return, but it's higher for a reason. And higher yield bonds used to be called junk bonds. Michael Milken was the guy that pioneered that. So anyway, great Wharton grad. So what are the holdings here in this bond fund? So it looks like it's all U.S. Treasury notes. Okay, wow, it's ridiculously diversified. And what I personally like to do is sometimes I'll own a bunch of this thing. It's called TIPS, and TIPS stands for Treasury Inflation Protected Securities. Okay, and basically it's all AAA rated bonds, and this fund TIPS. Tips are not for waiters. What happens is it goes up with interest rates, but it's also interest rate protected, okay, meaning inflation protected. So if inflation goes up like crazy, this thing will go up more. Okay, so it's low risk, low return. But anyway, it's something I've owned a lot of in the past.